Vision care insurance. Vision care insurance will often cover routine eye health expenses such as eye exam, contact lens fitting, contact lenses, and eyeglass lenses and frame. Some plans may even provide a discount on LASIK procedures and other corrective surgeries. A vision care plan may cover the cost of this item in total, up to a preset limit, or it may require the policyholder to pay a flat fee or percentage fee to share the expense with the insurer. Vision care insurance tends to be inexpensive compared to other type of insurance because many of the covered costs are predictable and expensive claims are rare. It resembles a discount plan more closely than an actual insurance plan because insurance protects against unforeseen and potentially catastrophic expenses. It's essential you fully understand each plan's costs and the benefits they come with when you buy vision care insurance. Take a look at the price for 1 year of vision insurance compared with the cost of an eye exam. Although vision care insurance is inexpensive, it may not be a good deal for the consumer if the premiums and co-payment under the plan are higher than paying for vision care expenses out of pocket. Special consideration. Eye disease, which are unpredictable and expensive to treat, will generally be covered by health insurance, not vision care insurance. Vision care coverage through many employer-sponsored health plans generally works a little differently than other health insurance or major medical insurance plans. Because eye exam can detect hidden medical problems, even those with perfect vision should get one from time to time. As someone ages, they will need more frequent vision exam according to the Mayo Clinic. People with poor vision, a family history of eye disease, or a condition that increases the risk of eye disease like diabetes should have more frequent exam. If routine exams are all that will be needed, then the cost of insurance probably isn't worth it. Before purchasing eye care insurance, think about what you need in regard to your health and what offerings that insurance provides that you will use, such as discounted lenses. Availability of vision care insurance. Vision care insurance can often be obtained through your employer, association union, or government program like Medicare or Medicaid. Most vision insurance providers also offer policies that you can purchase individually. Vision insurance is often a value-added benefit linked to the indemnity health insurance, health maintenance organization, and preferred provider organization, contracted with managed vision care network to provide eye care services. Advantages and disadvantages of vision insurance. There are benefits and limitations to vision insurance, and whether you should get it or not may depend on how badly you need it. If you have a history of eye-related medical needs, it may be worth the extra money to purchase vision insurance. If you only go to the eye doctor once a year for routine checkup, it might not be necessary for you to buy an expensive eye care insurance plan. Overall, vision care insurance isn't expensive, and it may save you money over time, especially if you have recurring eye care troubles or regularly purchase corrective lenses. If you end up needing eye surgery, it can help with the cost as well. Cons of vision insurance are that it may not necessarily cover the type of service you need or will not allow you to travel out of its network for treatment. In addition, if there is a specific brand of lenses you like using or specialized lenses or frames, it may offer a limited line of brands. Pros: this can often be easily added onto insurance plans. You can also buy a plan individually. Premiums are not expensive. The plans offset the cost of corrective lenses. Cons: you may not be able to use out-of-network services. If you don't need regular eye care, it may not be worth the money. Some vision care insurance limits what you can purchase in terms of eyewear. The bottom line: vision care insurance may be helpful to cover routine eye care such as exam, fittings, and help pay for corrective lenses. Some plans offer more benefits than others, but if you don't have a reason to see an eye doctor more than a regular checkup, it might not be worth buying a plan even if it is affordable. Thank you. Commercial health insurance. Commercial health insurance is health insurance provided and administered by non-governmental entities. It can cover medical expenses and disability income for the insured. As of 2020, 1,096 health insurers filed statements with the National Association of Insurance Commissioners (NAIC), a nonprofit that sets standards for the U.S. insurance industry and provides support to insurance regulators. Commercial health insurance policies are primarily sold by for-profit public and private carriers. Generally, licensed agents and brokers sell plans to the public or group members. However, customers can also purchase directly from the carrier in many instances. These policies vary widely in the amount and type of specific coverage that they provide. The term commercial distinguishes this type of policies from insurance that's provided by a public or government program, such as Medicaid, Medicare, or the state children health insurance program. In broad terms, any type of health insurance coverage that isn't provided or maintained by a government-run program can be considered a type of commercial insurance. Most commercial health insurance plans are structured as either a preferred provider organization (PPO) or health maintenance organization (HMO). The main difference between these two types of plans is that an HMO requires patients to use providers and facilities within the network if they want the insurance to cover the cost, while a PPO lets patients go outside the network. Also, each MO requires patients to choose one primary care physician, who serves as the central provider and coordinates the care that other specialists and healthcare practitioners provide. Referrals from the primary are often necessary to see a specialist. The net earning of the U.S. health insurance industry in 2020, according to the National Association of Insurance Commissioners, profit margin increased 3.8% over 2019. Types of commercial health insurance plans. Commercial health insurance can be categorized according to its renewal provision and the type of medical benefits provided. Commercial policies can be sold individually or as part of a group plan and are offered by public or private companies. Some insurance programs are operated as non-profit entities, often as an affiliated or regional operation of a larger for-profit enterprise. Health insurance in the commercial market is commonly obtained through an employer. Because employers typically cover at least a portion of the premiums, this is often a cost-effective way for employees to obtain health coverage. Employers are often able to get attractive rates and terms because they negotiate contracts with insurers and can offer them a large number of policy customers. Health insurance provided and/or administered by the government is mainly funded through taxes. It is often reserved for particular groups such as seniors, low-income patients, and ex-military personnel. Other examples of government-sponsored insurance include the Indian Health Service, the State Children's Health Insurance Program, and TreeCare. Self-employed people and small business owners can buy health insurance coverage, but it is often financially beneficial for them to try and join via a group plan through a professional organization or local group. The specific details of a commercial insurance plan can vary widely and are determined by the company that's offers the plan. State regulatory and legislative bodies also dictate certain aspects of what the plans are required to offer and how they must operate. These laws also establish mandates for how and when insurers must pay invoices and reimburse providers and patients, as well as the amount of funds the insurer must keep in reserve to have sufficient capital to pay out benefits. What is the difference between commercial and private health insurance? Technically, there is no difference. Commercial health insurance is provided by private issuers as opposed to government-sponsored health insurance, which is provided by federal agencies. Commercial insurance may be sponsored by an employer or privately purchased by an individual. Most private insurance providers are for-profit companies, but they can be non-profit organizations too. Thank you.